Welcome, everybody. I'm happy to be back with yet another feature of On the Ground. I'm very pleased to welcome one of our fellow managing directors, Pietro Castronovo. Pietro, welcome.
Thank you, Saeeda. Thank you.
Excellent. So, Pietro, we are looking at, about 8 months in, 2 kids under 5. How has COVID been working out for you?
Well, it was very difficult at the beginning to explain to my kids that I'm here for working, right? And life consulting is really a lot of travel. Personally spent a lot of time out in Kuwait and Abu Dhabi, outside of Dubai, anyhow. So when they used to see me, it was more for playing. So it took a little bit for them to understand that I'm here for working as opposed to for playing. But now I guess they got used to it, to have me around, and I really miss the part of meeting people, being in person, the energy. But I guess that's the new normal.
Indeed, it is the new normal, and I think we're all settling into it, right? It's although it will really and truly be the new normal when we stop calling it new and just say this is normal, but we're still a ways from that. Excellent. And if I remember, you actually were in Italy for part of the summer, weren't you?
Indeed.
During COVID.
Well, Italy, was, I think, the first country in Europe having issues with the COVID when we thought it was just a China issue. In reality, Italy was really the first country really hit. By the time I came in summer, things start getting back to normal. And nevertheless, immediately after August, this starts getting back to the level it used to be, and I think now slowly we are going back to another lockdown over there as well. Unfortunately, it was kind of weird because Italy has been always very famous to be very open, people going around, being very social, I would say, and all of this suddenly disappeared over this period, and it was very, very weird, to be honest.
I'm curious, what kind of an impact are you seeing of this on your work? Because you do a lot of work in the M&A space, in the transaction space. So how are you seeing the impact of, frankly, everything that's gone on in the last few months on what's going on locally?
So, Saeeda, if you will, the combination of COVID and also what happened last year in the region with the various issues in the private equity space, it was very shocking, especially in the first part of the year, where we're seeing both globally and locally the value and the number of deals going half what they used to be in the first half of 2019. So it was a tremendous impact on the industry. What we have seen is that the investor became much more careful on the investment decision, and the disposal process being much slower. And naturally, we have seen emerging all that M&A transaction where there is some sense of urgency. So M&A that needs to be executed very quickly, either because there is a restructuring element on this, there is a distress element on that, or simply because in some cases some of the private equity or family office are at the end of the cycle of investment, and therefore they are forced to take decision for exiting the business.
Yeah.
So that's what we have seen in the first half.
Okay, that's an interesting point that you raised, the accelerated M&A. What is that, and how is that different than what traditional M&A has been in the region?
It's completely different. It's really a different structure, require different toolkit, and require different buyer or seller on the other hand. So even the player that are taking part to this kind of transaction needs to understand that the way you execute an accelerated M&A is very different from any traditional deal. So, for example, we have been engaging on a buy-side transaction, which end-to-end, from when we launched the process to when we signed the SPA, it took 6 weeks. So, which is something shocking for the region, because normally what you do in 6 weeks is you do like the market testing, and probably you start launching the process. And we did end to end in the 6 weeks period.
Interesting. But then I think what you're saying makes sense, but then what is it that we can do? What kind of protections can we put in place? What kind of diligence can be done to make sure that you actually know what you're buying, as opposed to, frankly, who knows what?
Well, there are the two elements that needs to go together. I think from the seller perspective, it's very critical how you set the expectation on the other side, on the buyer side. So it's very critical that you act and you communicate very clearly what the situation is, what is available, what you can expect from the process, what you can expect in terms of data, what you can expect in terms of diligence, what you expect in terms of warranties and representation. And on the other side, it's important that the buyer understand that the normal toolkit and the decision-making process that you are used to simply don't fit with this situation. So you will need to think about the deal in a very different way. These are quite interesting deals though, because there are, I believe, especially in the region, there are so many opportunities to generate value out of this accelerated M&A, simply because there is a cost related to time, and there is a cost related to the risk that you are taking. And therefore, if you make it right, if you are able to take the right transaction at the right price, this is where you will make a lot of value for your shareholder.
Interesting. So it sounds like what you're saying is there are some genuine deals to be had, but buyer beware. Do your diligence, make sure you've done your homework, because if you don't, you might end up getting something that you didn't really bargain for.
Exactly. So what we have seen, Saeeda, to this specific aspect, we have seen risk-adjusted price, for example, being implemented, which is easy to say but very difficult to do. So the way you basically price the risk that you are taking from a reduced level of diligence, that's critical, and that's where really we are seeing the buyer investing most of the time, making sure that you protect yourself from a value perspective.
Yeah, makes a lot of sense. And I guess given what's going on in the region, we have in Saudi, we have a whole bunch of cases that are 100+ cases that are currently awaiting in the courts in the UAE. We have FRC, we have ADGM, DIFC, all very active regimes. So I guess given everything that's going on, all the possible restructurings that are already in play, I expect you see the trend for accelerated M&A continuing over the next few months and years.
Absolutely, and Saeeda, that's a very critical point to talk about, because we have seen in Saudi a new insolvency regime who somehow helped this accelerated transaction to happen, was implemented 2 years ago. We are seeing here in the UAE, for example, ADGM recently upgraded significantly the regulation to allow better execution of this accelerated deal within the context of the overall restructuring. And that's extremely important. So having the support of the various countries here in the GCC to help this transaction happen is very critical.
And I'm curious, what are you seeing from, I guess, the other side, the buyer side, right? I mean, we understand where the deal supply is coming from, if you will, but what are you seeing from an appetite of some of the larger investors, in particular, some of the sovereign wealth funds? Are they also jumping into this? Is it, is this interesting and exciting and lucrative for them, or are they waiting it out perhaps a bit and being a bit more cautious about it?
Well, where sovereign wealth fund and bigger investor in general, they fit better is in the medium to large size deal, where they can, they will require to have some enhanced level of diligence. So they are looking with more and more interest to this new paradigm, if you want, of deals. And I think they are understanding that that's a game where they should get in.
Okay, interesting. So they're on the hunt. They're actively looking out for new opportunities and they could be in distress or the distress space, or just general accelerated M&A.
Yeah, the challenge they still have is on the decision-making process, which naturally doesn't fit perfectly with the requirement, with the timing, with the speed of execution of this kind of deal. And that's where I believe they are still struggling. But as I said, I think they are increasingly understanding that this is something where they should focus on, because that's where you have the opportunity to generate value for your investors.
I mean, that's very good. And I'm curious, what's your view on some of the more traditional mergers, if you will, that have been going on in the market for a long time, and there's still talks, there's still murmurs of many more mergers coming down the pipeline across multiple industries, including financial services that I know you're intimately familiar with. I'd be
Yeah.
very curious to hear what your views are on that.
I think is inevitable. This will continue to happen in the region, and this is even more than the rest of the world, if you want. We had a great incidence of what we call the mega deal. So, for example, I'm thinking about Sabic last year. There are various other happening right now in the oil and gas space. So there are various transactions like this. There were already several mergers happening in the UAE, in Kuwait. So this is a trend that is inevitable given the situation, given the difficulty for the player to generate value and even to break even, frankly. So we expect that the merger will be one of the top items in the agenda of most CEOs in the region moving forward.
So I'm aware that before you joined us at A&M, you spent a lot of time in Europe, both in Italy as well as the UK, and you did a large amount of deal work, M&A, integration work there. And then while with us, you've also done a fair amount of that, specifically in Kuwait. You've done a tremendous amount of integration work as well as deal work. I'm curious, from your views, what are some of the similarities, some of the differences between how you've seen mergers, integrations being handled both in Europe as well as locally?
I think when you compare the region with what happened in Europe, Europe has, especially when you look at financial services, a much more consolidated experience, years and years of experience in merger, which on one side make it their life relatively easier from one side because they've been through before. I'm thinking about in Italy, for example, UniCredit, I think they went over 20 plus merger in the last 20 years, for example. But on the other hand, make it even more difficult for them to realize value. Here in the region, we are still at the beginning of the curve. Some of the big mergers already happened, but I think there is a long way to go still, especially in the banking sector. But the good news is the moment this will happen, the possibility to generate value, which will be much higher from what you expect right now in Europe. So, if you will, to your question, we are in a different part of the cycle. And the good news for the region is the opportunity to generate value from a merger here. It's pretty much very much significant and important and critical when you look at all the expectation you have in terms of results.
Okay, no, very clear. And look, I think you're absolutely right. We're, as a region, we're going from a period of significant double-digit growth to perhaps more mature growth with increasing focus on bottom line profitability. And for a lot of boards and CEOs, where growth is on the agenda and growth has frankly been a reality of life for many years, there are increasingly these questions around, okay, if growth will it come from organic or inorganic sources? So for a lot of these boards and a lot of the management team, what would be your recommendation or your advice that when you think about this, whether inorganic opportunities are the right opportunities for you or not? What would you say is the right way to perhaps start thinking about this and doing their own initial assessment before they go down the path of maybe talking, calling you or talking to some of us?
I think it's really looking for complementarity at this stage, looking for cost synergies first of all. I think the service model that you have in many countries in the region is still pretty much branch-led. This needs to change, needs to go much more digital. So this means that the moment you can find the right opportunity, the right partner for you to invest together and push as much as you can in a rationalization of the infrastructure and make it more digital, digital ready, digital friendly for your customer, that will be the first one to look at. And then there will be some revenue synergies, but the revenue synergies, as always in my experience, are less critical than the cost synergies when you look at a merger. And they are also more difficult to achieve. So the first thing I would do, given the amount of investment that I expect any single company is currently reserving for the digital platform, I think the merger can be a way to accelerate this investment, this transition to digital, and to achieve much more value for the shareholder and for all the investors.
And from your view, because you've spent time in companies, you've been the chief integration officer, if you will, even last year for, with some of the work you've done, what are the key watch outs that you would say that people need to be aware of, right? Because when you think about it, it sounds it sounds simplistic and it sounds a bit easy in that, okay, it's cost synergies, you go in, you look at that from all the cost buckets, and then you go ahead and execute. So what are some of the things that can happen that can possibly go wrong? Because as we all know, majority of the mergers don't actually end up realizing and creating as much shareholder value as is planned in the diligence phase.
Absolutely, absolutely. Oh, absolutely, Saeeda, and that's a critical aspect. The problem I see very often is that the people that are running the bank or the company in general, they need to understand that changing, transforming the business, managing a merger, an integration, is a completely different job than running the day-to-day business. It requires a completely different skill set, and it requires also different, cynicism in terms of looking at the value, looking at the execution, looking at making sure that what you promise and what you have planned to do is actually what is going to happen. And a merger is also a dramatic situation. So what we have seen most of the time is that the people that were at the beginning of a merger process, most likely you're going to have probably 30–40% of the people that are not going to be there anymore for different reasons, either because of the execution of the synergies, either because they are not going to be fitting into the new organizational chart. So it's an exercise that will require really, the ability of people, of professionalities, to understand what's the best use of capital, human capital in the future, and what's the best configuration for the new merged entity. So this level of skill set is not common, is not necessarily something that you will find even in the best line manager or in the best CEO of the company. So you will probably need to have some specific expertise to support you in this with people that have done this in the past. That's what I've said.
Yeah, makes sense, right? And I suspect in addition to the technical part and the technical skills, there's probably also a softer element that people need to feel that there is a neutral party, third party that's looking at this and doing this in a fair, scientific and robust manner, where communication is transparent and ongoing.
Absolutely. And Saeeda, let me tell you something. What we typically have seen in this transaction, and we work on some of this together actually, you will have normally, 20–30% of the people that are promoter, in the best case 20–30%. You will have another 20–30% that are clearly against the merger, and they will try to do whatever they can to keep the status quo and change the least as possible. And then you have the people in the middle. So the people in the middle, how you win this percentage of people that is not against, nor in favor of the merger, this is really critical. And this is really going to make the difference between a successful merger and a disaster.
Yeah, that makes sense. Well, thank you very much. It's been very, very insightful having you on. Really appreciate your time.
Thank you, Saeeda. Thanks for having me, and it's been a pleasure. And thank you, everybody.
Excellent. Thank you.
Bye-bye.
Bye, Pietro. Speak to you next time.